Hey, good morning. It is July 14th. It's Friday and the time is 11:35. Just making a short video on Google. So the new thing that I am trying to get is like to read the price action, and in that, like, I just look at the most probably is like the liquidity area, and I'll just explain it as I go in this chart. This is like a Google. Actually, I trade yes, that is the futures, S&P 500 futures, but just trying to explain like it works on all the instrument, be it forex, futures, stocks, commodity, anything. So here you can see that it's a daily chart of Google. So Google had been going up and then it's kind of pulled back to a level, and now it's you can see it like yesterday and today it's been up. So even if you are doing a day trading, right, it doesn't mean that you have to trade every day. And this one I'll explain like why I like to trade only like a couple of days, and if the market gives you a chance, then you can trade like Fridays or anything. But most probably I like to trade on a Tuesday, Wednesday, and most probably Thursdays. Mondays and Fridays is not a good day, but it depends on how the market is behaving. So let me show you. Okay, now when you look at this chart, you can see I'll just put like just lines on it, so you know that's just to look at it visually, right? But you don't need any kind of indicators or whatever like to put on the charts, moving averages or RSI. So let me take a look at where am I. Okay, so this is a daily chart, right? So I had I had like said that since this market was pulling down, it was somewhere right here. I think so. That was 22nd June, right? And the market was going up, and I said that it might pull back somewhere around. I had given a mark with 1313 something. So what I was looking at is this is called inefficiency, right? There was a price gap, right? So I was looking at this area at that time and just pull it up. So this there was a gap over here. So and then it was the charts were right here and it was going bullish, and then I said it will pull back till 13. So I was looking at in the gap, actually I was looking at the midpoint, right, something right here. So that's why I said I think it might pull back to 13 some 65 or some area was there. I just removed that mark. So this is what I was looking, right, and the market started coming down. So this is a daily time frame, and like if I want to project like where it's going up or down, I go on a weekly. So that's you can see that's a weekly. If you're like a regular retail trader, right, what you look at is like, oh, maybe something at bottom here, higher high, higher low, higher high, higher low. That's what they think, and then maybe it's going up, right? So over here, when I'm looking at this, I see a market structure break right over here. That's this green candle, if you can see. I'm just marking it so it's visually clear. Like you don't need all these markings, but when you're learning, it helps a lot. So that's why I'm just putting these marks, right? So this green candle right here, that's where when it broke it, right? Now I know that the market structure has shifted right to the upside. So it came down and then it's going up, right? So this is on a weekly basis, like when you look at it on weekly. So the market is over here, and what I look at this is you can see all this is down, right? There is no green candle right here. This is a weekly basis. That is a real powerful move down. So there is no buy side to it. There is buy side, but like if you look at it, let me go in monthly. So this is a monthly chart. So in a monthly chart, this is all sell side, and now we are over here. Okay. So I don't want to go in really details. This I'll just go to the daily and I'll show you what was going on, right? So let's go. It was a weekly right here, and I'm expecting the prices. Why I was expecting, because it's in a bull trend, right? So now we are thinking the prices of this is weekly basis. Now let's go on a daily. So here you go. And this is Monday's trading. Oh, sorry, Tuesday. And this is Monday's trading, the red one, and then it started going up, right? And before it came down here, I was saying that it might pull back, right? This was the gap that I was been looking at. Look, it just came touched on the gap. I was thinking it might get a little in, right, and then go up, but it didn't happen. So this is the liquidity that I'm talking about. What happened is from here it came down, it went up, came down, up, down, and then now it's going up. You can see this candle. This is a daily, right? So there's liquidity at the bottom of that is sell side, right? So what happened is the market makers, they came and took the sell side. Once they took the sell side, they started going up. It's going to be complicated, so let me take it to the lower time frame. When I look at it at 4 hours, right? So this is, let me show you later on. So in 4 hours, this is what you see: breakdown, going up, breakdown, going up, breakdown. So when it came down right here, I'm looking at this green candlestick right here. So if I'm looking at candlestick, I'm not looking at any patterns or anything. I'm not looking at shooting star or hangman or any of that. I'm just looking at the body and the wicks. Over here, I'm looking at this green candle, right? What happened is, you can see it came all the way down, came up. So let me show you liquidation, right? There was liquidity right here. You can see these are the highs, right? So this is buy side liquidity. What happened here is the market maker came and took the buy side liquidity and then came down. This is the sell side liquidity right here. Took the sell side liquidity, went up, came and took this buy side liquidity. Okay, and then this sell side liquidity right here. And then this one, when it came down all the way on the right side, it took this sell side liquidity from here, and then it started rallying. Let me remove all this now. So that's on a 4 hour time frame. Now I go down to 1 hour time frame. So what most of them say is, like, if you go, like, this is all noise, right? So it's going up and down. There's nothing to, like, it's better to trade daily. As you go in a low time frame, it's too much of noise, but it's not. It's the same thing. What's showing you in a daily chart is just breaking it down in a lower time frame and showing you on a lower time frame chart, right? So I like to trade use most probably Tuesday, Wednesday, and Thursdays, right? Fridays, what happens is most of them they take the profit. This is Friday today, so they try to take the profits, right? And then the market is coming down. So if you can see, okay, let me show you. This is electronic trading, right? And then regular trading hours, see, it makes a lot of difference. This is regular trading hours. So there are all these gaps when it closes and then it opens. Here it closes and it opens. Here it closes and then opens up, right? So these are the gaps. So I toggle it to the electronic trading, right? So extended trading hours. That's the difference. You can see extended trading hours when it fills the gap, how it looks. So this was Monday. So Monday it opened, it came down. Like, I'll try to explain it. Like if you are looking at a candlestick, right? Let me do it later. So this is 1 hour. Let me take it to 15 minutes. This is the 15 minutes time frame. Okay. So that's Monday. Monday it opened, it came down, right? It started coming down. Tuesday also it was down. Came all the way down over here in Tuesday. And then started going up. Tuesday you can say bottom like it says Tuesday, right? Tuesday is going up. Now it started going up, right? Wednesday went all the way up. This one kind of went up, pulled back. So there was some news, I guess, Wednesday. Then it came into Thursday all the way up. I think so. That was CPI or something on Thursday, right? This is Thursday, all Thursday, and now you can see Friday. It kind of spiked up and it's kind of going down. So I don't like to trade Fridays. Like you can see the meat. If you look at it, that was Monday was flat. Tuesday went little down. You can see even if you take say Tuesday from here, right, all the way till Thursday. If you trade this part, right, that's more than enough instead of trading every day and risking. Like say here it's gone down up, right, here it's a nice move up. So I'd like to trade this. Like if you see, let me take this. Let me put it on an hourly chart and see. Okay, that's an hourly chart, right? So let me draw something. So this was Monday, right? Now that even the market's open, right? Say right here. Let me draw a candle over here, right? So this is Monday's open. Then Tuesday it went all the way down till here, right? Let me see, Tuesday. So all the way down till here. And let's do this. And the highs, till now at least, say the high is, uh, it's Friday, right? Yep. No, that's going. So that's the high, right? So that's, so that was the high. Today Friday, that's the high. And it's coming down. The level is right here. So it might close its closing. Take the red candle right somewhere right here. The bottom of this candle, say just an for an example, right? So it's closing right here. So this is what took place the whole week, right? And now if you form a candle, so said, where did it open? Over here, right? It opened here. Okay, closed here, right? Let me fill it in. That's that's how you can see. Okay, so that's there, and then let me draw. So vertical line. See something like right here. Okay, so okay, so now you can picture this, right? So this is you can when you look at this candle, right? It don't look at this part, right? And don't look at this part on top. Sorry. So if you look, this is a candlestick that I just drew. So what you can see is when just looking at this candlestick, you can see it's a bullish candlestick, right? This is the low of the candlestick. This is the high of the candlestick. And then this is the body of the candlestick, and this is the wicks, right? Top and bottom. So if you look at this, anyone can say this is a bullish candlestick. And even if it's an hourly candlestick, you'll say this is an hourly bullish candlestick. It's a 5 minutes candlestick. This is still a 5 minutes bullish candlestick, right? So you can see what I did is this is a whole week trading, right? So this is a whole week's candlestick. What happened on Monday? It opened right here, right? So that's the opening price. If you know the candlesticks or bar chart, right? That's the opening. Let me see if I can use. Give me just 1 second. It's going to take some time. Let me finish it soon. So this is the opening, and this is the close. That's the high. That's the low. So Monday it opened. So you can see it started right here, right? What happened after Monday? It went down. Tuesday it went down. It hit the bottom, right? So that's where the low was. Tuesday, right? And then it started going up. So Wednesday, that's what I say. Like I like to trade Wednesdays. So from here it started going up. And but on the candlestick, this is the open, right? So it started going up Wednesday, Thursday. That's the high Thursday, right? But the highest point is here on Friday. There's some news, I guess, and then after the news around 10 or something, it started going down, and most probably people start taking the profit, and that's why you can see there's a dip at Fridays. So it's not worth trading on Fridays. Not worth in the sense if it gives a good chance you can still trade, but this is just a thing that I wanted to show you, right? This is the bulk of the move right here, and which we uh, we could have traded. So this is a bullish. That's like from 1 hour, 5 minutes. That's how I try to look at it. Like when it opens on Monday, right? If I'm bullish, right, and then I'm trying to trade. Monday I won't trade because I know it's going to form the bottom or whatever, right? On Tuesdays also. But like when you go like in 5 minutes, 1 minute chart, right? It's a nice way you can trade. So actually there's a lot of stuff I wanted to show you, but this is, and I have to go to work. So that's it for right now. But let me show you why I was thinking it's a bullish week, right? Let's go to daily. Let this. Let me remove everything. There you go. So I was looking for a pullback over here, and that's why overall I was bullish, right? So I was just waiting for something to bottom to happen, right? So this is a daily. I go in a 4 hours. Wait, sorry, maybe I'll explain it in another video because I'm looking at the market making style right now, out like support, resistance, and all this. So when this is a daily time frame, right? So you can see there are like guys who went long from here, right? There is their buy stops right here at the bottom, and these guys who have gone short, their sell is here right on top, right? So at the when it came down right here, right, I would have been a buyer because I can see right away that there is sell stops, right? So I can buy it right here. And what would be my, like, since I'm buying right here, where would I sell? I would have sold it over here. And then since it's a bullish and I'm still like say in this day, right, Wednesday, Thursday, whatever, I knew it's still going to go up, right? So then the next point would be somewhere right here or here. There's the sell side, buy side liquidity right here on top. You can see what happened is it just punched it and started going down. That's, let's see, trend line. So you can see that's my sell side, and that would be the buy side where I would have bought, right? Since it dipped in over here, and let me show some others. Sorry. So why most probably I would have made that decision. This is no indicator or anything. I'm just looking at the move from here till top price. Where is the center, right? So this is, see, this is the move I was looking for. Okay, and you can see it's in a discount. The top red part is premium and the bottom part is like a discount, right? Since it came in a discount and I'm still I know that it's still going to go up, right? So then I buy it at a discount and sell it at a premium. Okay, so that's one, and then the other one was the liquidity. So where I found the liquidity beneath the discount price, right? I could have got here, but then see it's still in a premium, right? So now I, when it came all the way in discount over here, right? I got it at the discount price, right? So I know I'm at fair price, and then I go long from there. Let me delete. Okay, so that's how I've been looking. Go down to a 4 hour chart. See, that's my liquidity. Here is when it came down, then again all the way it took the sell side, right? Go again, our hourly chart. So when I don't hold my positions overnight or over, like I just trade, right? My futures really maybe 2 hours or something. So this is where it bottom. You can see like if I go long, right? This is my first target right here. There's liquidity right here. So let me go 1 hour. Let me go in 15 minutes so it will be more. So this is, if I have been long, I would have taken, see this is a liquidity, right? Buy side liquidity right here. Let's see, take over here, right? Then the next one would be right here. I'm not marking it. See, as it goes up, but it's not going to be like I'm buying it on Monday, Tuesday, right, and then holding it all the way. So this is the bullish cycle that I'll be trying to get this little more, but let me end right here. I'll make another one maybe when I get time later in the week. Okay, take care. Hope this was interesting.